Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be attempting to answer the question, have the Bitcoin mining stocks finally bottomed? We're hearing a lot of fear, uncertainty, and doubt in the media in relation to the halving event, which is now only a month away, ETF outflows, and of course the proposed 30% tax from the Biden administration, not to mention the decoupling we've seen between the price of Bitcoin and the price of a lot of these Bitcoin mining companies. Now, with that being said, yesterday marked a turning point. We saw a ton of these companies rebound in a big way, and we want to talk about that in today's video. So without further ado, you guys, please take a second, hit the like button. It's a huge help to myself, the channel. Anthony loves it. Our goal for this video is 500 likes, you guys. If we can hit that, we're going to be sending out some TeraWulf swag boxes. In addition to that, we'd love to hear your comments in the section below, specifically if you're holding shares of any of these miners, your outlook on halving, and the remainder of 2024. And you guys, if you're not currently subscribed to the channel, McNallie Money, we're about to hit 43,000 subscribers. We'd love to have you as part of the channel, so feel free to join. Now, with that being said, let's get into today's video. Okay guys, so that's right. Today's video, you've got our resident analyst, Anthony Power. Anthony, we're going to be attempting to answer the question, have the Bitcoin mining stocks bottomed? So obviously a very difficult question. This is not financial advice, guys. I'm going to preface the video with that, but a lot of interesting developments since Christmas in the Bitcoin mining space that we wanted to go through in today's video. So Anthony, thanks so much for being here with us today.
Thanks for having me, Bryce.
We're really going to be testing your analyst skills today, Anthony, with some of these scenarios. So here's the setup. Going into Christmas, we had sky-high transaction fees. We had all the excitement around the ETF, general bull consensus in the Bitcoin market. Now, over the last couple of months, we've had the Biden administration come out with a 30% proposed tiered tax on Bitcoin mining, so 10% a year out over the next 3 years. We've also started to see a tremendous amount of ETF outflows over the last couple of days, Anthony, which is a little bit of a head scratcher as to why they're starting now. And then on top of that, we've also had a lot of fear, uncertainty, doubt in the market itself in relation to the halving coming up in now only a month's time, Anthony. So a polar opposite kind of consensus in the market now. And since then, we've seen a real decoupling of the price of Bitcoin and the price of a lot of these miners that we cover. So before we go any farther, Anthony, what's your take on that landscape? Are you starting to feel kind of that bearish sentiment as well? And would you say there's been a shift in tone and sentiment in the Bitcoin mining space over the last few months?
Well, we talked about it before on the podcast. I mean, you know, these miners really did rally in 2023, and most of them were up at an average of about 500%. We know that Bitcoin's done really well since the start of the year. So it's currently up 60-70% since the start of the year, reached an all-time high last week, 73,000. It's hovering around 67,000 today. Yesterday was a great day for the mining stocks. I think sometimes you need a little bit of patience. These miners are getting great revenue streams from the price of Bitcoin at the moment. Yes, the difficulty is impacting them because with higher Bitcoin prices, you've got more miners globally going online, because even some of the less efficient miners probably making elements of profit. So that's driving the global hash rate up. That's bringing the difficulty increased, and therefore production is affected for each miner. However, the Bitcoin price is more than give them back them potential lost revenue. So the miners have been benefiting in January and February and in March from these higher prices. And it's probably just a matter of time before the markets, then start to point, away and look at the mining stocks again. So yesterday we had a good rally. We had great, phenomenal volumes yesterday. I mean, some of these stocks are, we're talking tens of millions traded a day, and we've seen the likes of Marathon traded 100 million a day. So I don't think there's any sort of a bear cycle for the Bitcoin miners at the moment. I just think, there's been opportunities for people to go into the ETFs, and we talked about that before. So there's been a bit of that. There's also been some talk about a lot of short action on the mining stocks as well. So, we have these, market makers out there, and there's things that are going on in the background there. But I've just been patient. I haven't sold any stocks recently, and I've just been adding, when the opportunity arises. So, it's been for some people it's been an opportune moment to get in some of these stocks with the price going down, since January, and some of those big gains have been given back. But we saw phenomenal rises yesterday, and we'll talk about that a little bit later.
We sure will. There's two specifically I wanted to bring up on the screen, Anthony. We'll save the best for last there. But on this topic, I wanted to dissect each one of these kind of concerns in a little bit more detail. First and foremost, this Biden tax, Anthony. So we've actually had the pleasure of a couple CEOs coming on this week. We had Sam Tabar from Bit Digital. We also had Adam Sullivan, his first visit from Core Scientific. So we took the opportunity to ask both of these CEOs about this proposed tax. Very interesting because Core Scientific is probably the biggest producer. It is the biggest producer by Bitcoin based in the United States, so 100% exposed to that tax. Whereas Bit Digital has a lot of geographic exposure. They operate in Iceland, Canada, the United States, so they've got a little bit more spread out operations. So we heard from these CEOs, Anthony, that they think this may be a little bit of gamesmanship and some political jockeying going into the election. Do you think there's any merit to this 30% tax, and is this going to impact the long-term health of these companies?
No, I mean the issue for me is it's not industry applied. It's just applying to the Bitcoin mining industry. So if it was looking at all industries, and they had a sound argument for saying that the overall energy infrastructure in the US needed significant investment, and the only way to do that would be to raise taxes against the big users. Then you would have sort of like a little bit of sympathy for the government trying to do that, because at the end of the day, if your infrastructure needs updating, it's going to cost money. That money has to come from somewhere. Taxation is normally the way it's applied, but they picked on the Bitcoin miners. Bitcoin miners mine the Bitcoin on a daily basis, and if you think about the number of people in the US who are sort of like now have sort of like some crypto in their own wallets, that percentage is quite significant. So that would be an interesting situation come to voting time, because people will probably vote to make sure it doesn't affect their wealth. The other thing that was mentioned is, and we know that we've seen the likes of China when they banned Bitcoin mining in China back in 2021, and at that point in time, China mined 60% of all Bitcoin. That stopped overnight effectively, and those miners had to move to other countries, and some of them went into Kazakhstan and other local countries where they could utilize there. To some extent, it was a success. To some extent, it wasn't. Some actually came across to the US and set up sites here, and we heard from Sam yesterday saying that Bit Digital, one of those companies that did that. So what that says is, when these things happen and it becomes less efficient or profitable to mine Bitcoin, some of these mining companies prepared to move to locations where they can. And we've seen the likes of Bitfarms, we've seen the likes of Hive Digital, we've seen the likes of Marathon Digital, we've seen the likes of Bit Digital, all move to locations outside the US. And we also have 4 or 5 Canadian miners that won't be affected by that. So there are areas that they can move to, quickly. The challenge will be for some of the big miners with the big sites. So, how does Riot move, the number of exahash it has at his Rockdale facility, and also the fact they're building, effectively a 1 gigabyte or gigawatt site at Corsicana. How does that change the landscape for them? Because that investment in those sites is quite significant. But I think I think, like you said in the intro there, I think this is just sort of like probably trying to drum up support for votes for the Democrats, and the Republicans are they're in control of the House at the moment, so the likelihood is that it won't get passed. But if they come across with a better argument and look to all industries that use power, so look at the car manufacturing industry, look at battery manufacturing industry, all these big, the oil and gas industry, and equally apply, a similar weighting, so it wouldn't need to be 30%. Then they'd probably have a better argument to go forward. But I think just to pick on the Bitcoin miners it was probably a false pretense and unlikely to get the support it needs to go through.
Yeah, it definitely feels a little bit punitive to me, Anthony, and that's kind of the general consensus we've been hearing in the industry as well. So, fear, uncertainty, and doubt, topic one, we've put that one to bed, Anthony. The next one I wanted to tackle here, the halving. So, we've spent a lot of time with these miners talking about fleet efficiency, talking about rig upgrades, talking about new mining rigs coming into market. Balance sheet strength, debt repayment, TeraWulf, which we're going to talk about later, huge strides this year in debt repayment, along with Bitfarms. So the halving has been a concern. I think generally, Anthony, a lot of people that are now buying these ETFs and stuff, maybe they don't fully understand how Bitcoin architecture works, how the halving is set up, why it's set up. But I feel, and we've talked about this, the overwhelming concern here was just the uncertainty. We know that markets don't like uncertainty, and a lot of people think, hey, you know what, I'm going to park my money somewhere else. I've got other Bitcoin proxies like MicroStrategy, like ETFs that I can harness now. Why would I play around in the miners until this settles out? So that was happening over the last couple of weeks. Now, based on yesterday's movement, we've seen a lot of life come back into these miners. Do you think most of those people who are uncertain, unsure about the halving are out now, Anthony?
Maybe so, and maybe so. And I've seen, a lot of social media influencers, like Mike Alford, have articulated the situation well, and told people to be patient, look to take opportunities when these mining stocks have reduced. Highlighted some of the strength in some of the miners out there. I mean, there's that much information out there available now. People can do research and start to understand, where some of the value is in the mining stocks. Remember, the Bitcoin price dropped to just over 15,000 in December 22, and I don't recall any of the miners switching off at that point. Now we're sort of like literally 4 or 5 times that in terms of price increase. And yes, we're going through a halving in like less than 5 weeks' time. Most of these Bitcoin miners are probably in a position where they can mine comfortably, even though the rewards are going to drop by 50%. And once those rewards drop by 50%, what impact will that have on the ETF funds who are trying to scramble and buy as much Bitcoin as they have every day? And there's only so much supply out there. We know there's at least 70% of people aren't even moving the Bitcoin once they've purchased it, and so the supply is going to shorten. The demand is still high. There's still net inflows going into these ETFs. So that's a positive thing. We know from previous cycles, the Bitcoin price tends to rally, 3 or 4 months after. This is the first cycle. The actual Bitcoin price has reached record highs before the cycle. So there is an argument there to say that this time it's slightly different. And maybe we don't see as big of bear cycles going forward in the future, because if demand continues and people want to buy, and we haven't really had that sort of the retail side come in with their sort of like fear of missing out on this opportunity. It's all institutional buys at the moment. It's going to be an interesting time. I was just having discussions today with a few people that are sort of starting to sort of ask questions about Bitcoin where they weren't asking questions a few months ago. They're seeing the price at the moment, and it is starting to register with people that don't normally look at this as an investment opportunity, and are thinking of like putting a small amount into Bitcoin itself. So it's an interesting time. The miners will manage going through the halving. We've seen that what they've been doing in the last 6 to 12 months, buying these new machines, the new Bitmains TNS 21s, these really efficient machines. Replacing some of the older machines in their sites, and bringing down that efficiency. And we talked yesterday with Sam, and we talked about the average efficiency for in sort of like mining, and we looked at figure about 35. A lot of these miners now are sort of like in the 20s, because and that will only increase. We're sort of, most of them are getting towards that mid-20, and when these new orders start going in there, we're going to see miners getting close to 20, some sub 20. We've already got Marathon at 24, got CleanSpark just a bit higher. You've got the likes of Riot, Core Scientific, all sort of in that sort of mid-20 range there. And some of the other miners, some of the smaller miners like DMG, Blockchain, they've been buying T21s. They're expecting them to be shipped in March now. That's going to increase their their size of their exahash by 50%. So they're going from from 1 exahash with the first half of their order coming through to get to 1.5 exahash with really efficient miners. So that will bring their efficiency down. And this is happening across the board. We're seeing a lot of companies buying new miners. There's also new miners being produced by other companies, and we'll see how that goes throughout 2024, whether they can compete with the big boys. But I think that the position at the moment with mining companies, I think they're in a good place. The price is driving profits this year. Whereas, if you think about last year, Bitcoin price, even though it rallied, it sort of like probably averaged about 30,000 for the whole year. And we're seeing double that at the moment. So, there should be less questions about whether miners will be switching off during a halving. And just a case of, will we see the growth from some of the smaller miners with the opportunities there are at the moment?
Yeah, great points, Anthony. I want to get into those ETF flows in a second here, and then we'll talk about the big gainers yesterday. But two things you brought up, and again, maybe this is an education piece. Number one, you guys, Bitcoin miners are essential to the Bitcoin network. The network itself needs miners to create not only new Bitcoin, but to validate the blocks. And I think a lot of investors forget about that as well, as this is a fundamental piece of Bitcoin. And without the miners, the Bitcoin network itself won't work. So people invest in the ETFs, but again, they need that underlying infrastructure, which is, of course, the miners. The second point, Anthony, say what you will about halving, but this is no surprise. It happens every 4 years. They can almost calculate it down to the minute. These miners are prepared. They know that the halving is part of their business cycle. And we've already been hearing CEOs talking about the 2028 halving as well. So in my opinion, Anthony, yes, it is a hit to the industry, but this is something they've been actively preparing for. And I think a lot of that uncertainty is now, or air has kind of been let out of the tires. Now, the last thing putting pressure on Bitcoin price and in turn the miners is some of these ETF inflows and outflows we're seeing. So over the last few days, surprising to me, we saw hundreds of millions coming out of the Grayscale GBTC trust or ETF now conversion. Anthony, any idea why we would see such a large spike just randomly a couple months into the ETF here?
Well, obviously the fees associated with the Grayscale investment there are higher than some of these other spot ETFs that were approved in January. So you would imagine that some of that money is coming out of Grayscale and going back into the other ETFs. But there's been there's been positive net inflows literally on every day. I think there's been a couple of days where we've had a net outflow position. But we saw on the 12th of March, something like over $1 billion of Bitcoin was purchased by the ETFs. And when you consider that day, if we take the 900 Bitcoin that's produced on a daily basis, that accounted for about $65 million of Bitcoin being produced and over $1 billion of Bitcoin being purchased by the ETF. So that tells you, you're looking at 15, 16 times the amount of daily production being purchased by the ETFs. And how long can that be maintained? And I saw, an article saying that could only last for maybe a couple of months more because there's not a great supply out there of and to get the supply, from an economic standpoint, that the price would rise because people then start to sell when the price rises and they have points of what they would sell. So that it's just basic economics. When demand is higher than supply, the price will increase. And we're seeing that demand at the moment from the ETFs. And I said before, we haven't seen the demand from people rushing in yet from the retail sector, those that haven't adopted Bitcoin yet. So once that happens, we'll see extra. But I think the ETFs have been driving the Bitcoin price because we've seen that, this year. So, Bitcoin, as we stand at the moment, is about 58% higher than its year to date. And there are only a couple of miners who are at the same position as well, showing a positive position since the start of the year. So most of the miners are still in negative territory this year, although we saw those massive gains, 500, 600, 700, Core Scientific 1100%, last year. We're still waiting a little bit of catch up. But I think I think that the miners will follow. The miners will follow because at the end of the day, the Bitcoin price brings in the revenues for the companies.
Yeah, I would definitely tend to agree there, Anthony. And the 2 points you brought up, I wanted to talk about the short selling as well. You mentioned that a little bit earlier. And the other one, Anthony, you talked about it, is the amount of Bitcoin held on exchange. And I actually saw this visual on Twitter. It's nearing 4-year lows now in terms of the amount of free available Bitcoin for sale. So definitely an interesting dynamic. Now, last topic on the Bitcoin price and the impact on miners. You mentioned earlier some shorting activity, Anthony. So as a result of all these concerns we just talked about, the halving, the tax, etc., you got to imagine there's some short-term traders, people looking for opportunity. And just a reminder for you guys, when you go long a company, you purchase shares to open your position. That's what Anthony and I generally do. If you're shorting companies, you guys, you sell to open your position. So there's a lot of additional selling pressure as shorts enter a stock. And if you get that in combination with some of this fear, uncertainty, it doesn't take long to really move these companies around. Keep in mind, you guys, compared to Apple or Amazon, Facebook, these are very, very small companies, couple $100 million market cap. It doesn't take a lot of work from these large institutions to manipulate that price around, especially if there's some widespread concern in the market, like the halving, like the taxes. So hopefully that put that portion to bed for you guys. You're feeling a little bit more comfortable. You didn't sell out of your positions over the last couple of weeks, because lo and behold, Anthony, yesterday comes around, Bitcoin hardly moved at all. It's actually down on the week. And we have companies yesterday, TeraWulf in excess of 35%. IREN, formerly known as Iris Energy, up in excess of 20%, Anthony, seemingly out of nowhere. I don't know if the shorts got bored or if the tax outlook changed or what happened, but something happened on Wednesday, March 20th. And our portfolios absolutely took off. So do you think this is now a mark, a turning point, a TSN turning point, so to speak, Anthony? Or is this just an anomaly, a good day for the market?
Yeah, it was a good day. We've seen these days where the mining stocks can increase 30, 40, 50%. The only issue we've seen since January is the Bitcoin price has really rallied. And when the Bitcoin price increases 67%, looking at previous correlations with the mining stocks tend to be more volatile, so you'd expect an even bigger rise. And yet there was only one miner that was able to sort of like keep up with the Bitcoin price, and that was probably because CleanSpark had added an extra 6 exahash. So they effectively added a mid-tier miner to their portfolio in the first 2 months of 2024, and so the market liked that, and that gave them a boost in the share price. But yeah, there's been a lot of short interest. TeraWulf was mentioned a few weeks ago. There was a lot of short interest there. So maybe that earnings report that came out the other day from Paul and the team, that was positive there, taken positive there. They've highlighted the one area that is a concern to people about the debt and looking to repay that down. And if they can do as good a job as what Bitfarms did over the last 20 months, that'll put them in a good position, because the one thing that TeraWulf has, versus nearly all the miners, is they've got one of the cheapest energy rates to mine. And if you look at what the rate they're paying at the Nautilus, I don't think any miner can come close to that. And that's at 2 cents on a fixed, 2 cents kilowatt hour on a fixed rate. So it's just that the debt position there. It was $19 million of interest they paid in 2023. Now, having reduced a significant amount of that debt in the last few months, and they make another payment in April, this will save them millions of dollars of interest payments, and that's going to be a benefit. The sooner they do that, the bigger the saving they have, and then it's all a case of then they've got a really low cost to mine a Bitcoin if you exclude that interest payment. I think Paul's even saying, post, I think you said at the moment it's like $25,000 to mine a Bitcoin. Well, if the price is 66, 67,000 today, there's a lot of margin in there, and hopefully they can use that margin to pay down that debt quickly as we go through the halving, and everything then is really a benefit for them, because they've got a great operation, great management team there. They've got experience in the energy market. TeraWulf before were an energy company before they became a Bitcoin miner, so they've got all that experience there. They've got great facilities. They're expanding those facilities. And as a benefit, we've got Paul coming on the podcast next week, so we'll get firsthand exactly what their thought process is at the moment and what they think of the current situation. But great day for those two miners yesterday to be up so much when you think there's, they've all these stocks apart from CleanSpark have had to take come down from where they were at the beginning of the year, which was very strong from a good 2023.
Yeah, it sure has been an up and down year so far. And I'm glad you brought up Paul's interview. We have him next Tuesday, you guys. So if you have any questions for TeraWulf, be sure to leave them in the comment section below. That'll be the interview where we're going through the earnings, the outlook for 2024. We also have BitDeer coming on for their first time Thursday next week. So same thing, guys, if you have questions there. And to finish, Anthony, IREN, I just wanted to give a special call out. This is one that I've been seeing tremendous amount of attention on the X community, people talking about this one being undervalued, opening positions, buying the dip, all kinds of different positioning around IREN, and boy did it really show up yesterday as well. So a special shout out to the team at IREN, and looking to get them on early April for an interview. I know that'll be a much anticipated one as well.
I've been obviously following IREN for a long time now, since they became a public miner back in September 2021, and Dan was one of the first CEOs to reach out to me, and when I was doing my analysis, and he was liking what I was doing 3 years ago. So I've been following their stock with and their company with a lot of detail, and now I'm seeing the name mentioned in other analysts' updates as well now. So when you look at the other analysts on social media, IREN's getting mentioned with the likes of CleanSpark, with the likes of Marathon, with the likes of Riot, with the likes of Core Scientific. So they've got ambitious plan this year: 10 exahash by the middle of the year, 20 exahash by the end of the year, and we think that 20 exahash is now sort of like it's the sort of the border that separates the miners. It's a target to reach, and it's interesting how many miners will have got that 20 exahash as their target for reaching in 2024. Go back 2 years ago, 5 would have been a target. Now it's like, these single digit numbers, it's just not there. They're going for 20, they're going for 30. CleanSpark, Riot and Marathon are looking at even higher numbers than those for 2025. So yeah, it's a good time. It's a good time, and there's no stopping some of these miners from the expansions.
Yeah, and that's exactly why, you guys, we like to include some of the smaller companies. Soluna, DMG, Sato, and of course Bit Digital, you guys, because all of these miners were this size at one point, and it doesn't take long. It takes a couple good years of great operation, great execution, and these will be now the mid-tier, the large tier miners. So again, we like to include a wide or broad array of scale and scope here, just so you guys can kind of see and hear about all different types of companies in this space. Anthony, we covered a lot of ground today. Hopefully we gave some confidence out there for our subscribers in terms of some of the FUD or fear, uncertainty, and doubt that's been in the news lately. I think everything is pointing in the right direction, but unfortunately, as we know, there's going to be bumps along the way. Thanks so much for being here, Anthony. I'll give it back if you have anything to close out with, and appreciate your time.
Yeah, I'd say just being patient, looking at the opportunities that might come up to maybe add a few more shares to the portfolio. Not looking to sell at the moment. I think, until we see some turnaround with the ETFs, I think they're just going to continue to purchase. People looking to use that investment in their tax-free investments there, use crypto and Bitcoin mining stocks in their investment, and it's a great place to be at the moment.
It sure is. Guys, if you're still watching, thanks so much for the support. Make sure you hit the like button. It helps get this content to other people. If we hit 500 likes, we're giving a TeraWulf swag box giveaway out. If you're holding any of these companies, we'd love to hear your thoughts in the comment section below and your outlook for halving in 2024. That's all for now. Thanks for watching. We'll see you in the next video.